Hello everyone, welcome to Intermediate Corporate Finance. My name is Andy Kim, I'm your instructor, and this is our first class, so let us begin. So this lecture, I'm going to introduce myself and give you some introduction about this course. I'm going to go through the syllabus, and then, so let's see. If it was the usual situation, I would have seen you face to face and give some, fun lecture on the spot. But as you all know, this is a quite unfortunate situation, so that we have to deliver it through the internet, and I'm recording it at home. The trouble with this is that we have a quail in my home, 메추리, you know that, right? A male guy, and he is chirping every now and then. I thought chicken was the only one, or rooster was the only one chirping like "Quack-a-dack," but this guy Metri is doing that even more frequently. So sorry if it is interrupted quite often, but please bear with me. Okay, it's gonna be all right. Nothing is happening, but the quail just wants to interrupt. Just to wake you up, I hope. Okay, so who am I? I'm Andy Kim, as you see, or in Korean, that's 김영한 교수님, right? On the left-hand side, you see it. How is it 김영한 2, you say? Where is 김영한 1? Actually, there is another professor who is exactly named as Kim Young-han in 경제학과, or economics department. He is about 10 years older than me. The trouble is that many students and also many people outside the university or whatever, they email me using his email address, so that he gets wrong email, and vice versa. I get plenty of wrong emails that has to go to him. So my message, first of all, is make sure you email me by writing ayhkim@skku.edu. Okay. Yeah, of course, the economics professor Kim Young-han 교수님 is a great one. He's a very kind person. So he will forward your email to me if it is wrongly directed to him, but let's not bother him, okay? I am the program chair of Global Business Administration, as you all know by now, right? And then I'm an associate professor of finance, and you see my phone number, but email address over there. Email me, right? Especially this year, we have to completely and totally understand what's going on. So any of your comments or suggestions or whatever, welcome. Just email me, right? And here, let me introduce myself a little more, right? I've been teaching finance at SKKU since 2015 March. So this is my 6th year of teaching, okay? Global Business Administration, you guys. And I was teaching finance at NTU of Singapore, Nanyang Business School, right? Supposedly the MIT of Singapore, or one of the top engineering school of Asia, right? And for about 5.5 years. Now, by the way, I strongly encourage you to go to Nanyang Business School as an exchange program. This is a wonderful school, a fantastic school, by the way. You will learn a lot of new things. Before joining Singapore in 2009, I got my PhD in finance at the University of Minnesota in the United States. And 2003, I got the MBA degree from the same school. Before that, I worked for Bank of America in Seoul branch for about 2 years as corporate credit analyst. Also, I graduated from Yonsei University in 1999. And then at that time in my undergraduate days, I thought I would be marketing major. So I belonged to a club called MAP, right? Now, here I have to say a handful of things to you, okay? Because I like to, be, kind of an advisor for your career. And then the thing is, the year of my undergraduate commencement, 1999, and then the year of my PhD earning, right, 2009, commonly they were the year of global or Asia level financial crisis, right? And then my undergraduate days, I had, I had such a hard time obtaining a job because it was historically unprecedented crisis, so that no company seemed to be hiring me at all. But I spread out my resume to 75 different companies, and luckily I got final offer letters from 3 different companies, right? Samsung Life Insurance, and then the L'Oreal, and then Bank of America. And then I chose Bank of America because I felt that there is a mission for me to solve a serious problem, because our country was suffering from global financial crisis, Asia level financial crisis. So I thought that there is some serious problem in banking sector, so that I can solve some problem over there. Okay, that I had some sense of mission over there, so that's why I chose it. But before that, I had no idea that I would end up in finance. As I said before, I belong to marketing club. I'm more of a like fun guy with marketing sense, and that's what I like most. And you will realize that during my lecture. Okay. Anyway, in 2009 or 2008, that was another terrible period called global financial crisis. That's already a decade ago or more. Okay, that was time when the Lehman Brothers went bankrupt and Bear Stearns was in trouble. It was just unimaginable situation. Okay, but that kind of terrible things happen and it unfolds. As you see right now, what's going on in terms of public health, right? Unprecedented things happen. Black swan events happened. The trouble was in 2009 that so many public schools shut down, so much so that no schools seemed to be hiring any new professors, okay? Assistant professors, rookies, they said, I'm sorry, we are going to stop hiring anybody. No chance for you, bye-bye. That was the situation. Very, very terrible situation. But in that year, I sent out my resumes to 150 different universities all around the world. Like crazy. It was a dead or alive situation. But luckily, I got one offer from University of Cambridge in Britain, right? And by the time our family tried to go to Cambridge, we got an offer from Singapore, NTU. So the compensation was huge in Singapore, so we chose Singapore instead of Cambridge. Anyway, that was a very tough and challenging environment. But keep on, which is quite similar to what you are experiencing right now. Okay, I guess you guys are suffering even worse situation because this is really a terrible, prolonged depression, and then health issue, public safety issue is also, a health issue is also there. So whenever you are depressed or you feel stressed out for your job search or internship search, come and talk to me. Okay, I'm here for you, and at least I can listen to you and psychologically comfort you somehow. Okay, and another message that I have to tell you is that keep on sending your resume so that you would be marketable in any place, right? Send out and let the people know about you. Okay, one-page resume, make sure you have it. Anyway, so that's it for my introduction. Okay. Oh, another part of my introduction is that in my undergraduate days, I was focused more on marketing, but in the marketing club, more than half of us ended up in global financial industry like Goldman Sachs or Merrill Lynch or Credit Suisse, Bank of America, right? And the thing I want to tell you is that you never know what you're gonna get. And by the time you graduate from undergraduate program, you are more like a white paper, okay, 도화지 kind of situation, so that the company can draw some pictures for you or let you draw your picture later on. Okay, so don't believe that you will be stuck into the finance side simply because you studied finance more. Don't believe that you will end up in marketing simply because you studied marketing much more. You never know. Okay, commonly, as far as I know about GBA, they put you into those international division anyway. What kind of company you go, it doesn't matter, right? Global banking or domestic banking, they will still put you into foreign or international division. Likewise, if you go to any marketing company, similar things will happen to you too. So be open for any chance, okay, that unfolds in front of you. That's it. Now, email me whenever you have questions, ayhkim@skku.edu, and tentative office hour, right? Tentative office hour, Thursday 9:30 to 11:30 a.m. Okay, and then just come and knock the door. My office is 341 International Building. 341 International Building, 국제관 3층, right? Now, the phone number of my office is over there. This is the most recent one, so use this one. But I prefer email much more. And the reason I tell you about this phone number is 2 slides before you had my phone number in business school building. So I don't use that one that much, but this one is the one you should use, okay? All right. Teaching assistant for this course is Camelia Sotki. Her email address is over there. She's a PhD student in finance, and she's from Morocco, and speaks Korean, English, French, Arabian, Chinese, or whatever. Okay, so you can email and ask her a little bit, but mostly, please, talk to me directly. Okay, just feel free to come and ask me. Okay, email me. Now, disclaimer. All right, what is this about? Well, if you cannot allocate at least 8 hours of studying, excluding the class, drop it as soon as possible. Okay. Number 2, the definite prerequisite for this class is Finance 101, which is financial management or equivalent classes. If this is your first finance class ever in your life, please drop it and see you next year. Bye bye. Au revoir. Adios. 再见. Sayonara. Alright. Now, let's begin our discussion about this formal introduction of the course. Okay? So, I wonder, anybody investing your money in Bitcoin? Okay? By the way, Bitcoin, the price of it has been fluctuating like crazy. So, like 5 years ago, when my friends in the industry suggested me to buy this Bitcoin, geez, I should have listened to that guy's voice, but somehow I just ignored it. But at that time, the price was like really minimal, 1,000원 or like $1 or $10 or something. But after a while, okay, since 2017, people started to recognize the value of Bitcoin, and then the market price of it shot up like crazy to about 4천만 원 or like 40,000 US dollars worth or something. And then a lot of the portion was in bubble and then bursted like crazy again, so that so many people lost their money. And then ever since, the price has been fluctuating at around 10 million Korean won or 10,000 US dollars worth, right? Right now it stands at 11.6 million Korean won, as you see it. Where would it go? Or do you ever put your money on this one? I'm not asking you, I'm not telling you to put your money there, but it's worth paying attention. People make some money or lose some money by investing in this kind of asset. Okay. How about gold? Okay. Gold price these days, let's see. Wow, this is $16.51 per ounce of gold, right? The far right hand side of this chart, that's today's price. Okay, or yesterday's price, to be honest, right? And then the price of the gold bullion, okay, 1 ounce of gold has been fluctuating back and forth, but depending on the economic situation, macroeconomic situation, the price of gold has been going up and down. And especially the gold price has been performing very good when the global economy is going bad. For example, in 2011, what happened? Well, that was a time of a lot of government debt problem happened in Europe. Okay, government debt crisis was there, and in these days, why is it going up again? Well, because we have huge uncertainty coming up again. Okay, more microscopically these days, due to the virus situation as well, right? You never know what's going to happen in the macroeconomy these days. This is terrible situation. Now, how about US dollars? Sometimes people invest in foreign currencies, right? Yesterday, the price of US dollars was 1218 Korean won per dollar. 1218원. That's crazy, okay? But not that crazy, by the way, because if we think about the macroeconomic uncertainty that Korea is facing right now, this is what's happening. But the key message is all these kind of assets, Bitcoin or gold or US dollars or stock market, the stocks itself, right? Those assets, their prices comes and goes and up and down, and then sometimes people make money by investing in these risky assets. Sometimes they lose money. It happens. Now, how can we succeed in investing in these kind of risky assets? Okay, let me bring your attention to these world's 3 best investors, maybe world's most renowned investors, 3 of them. Of course, number 1 is Warren Buffett of Berkshire Hathaway, as you see on the right hand side below. And number 2, maybe, who is it? The quantum fund guy, okay? George Soros, right? And the number 3 guy is in the middle, who is Jim Rogers over there. Now, in early 2019, me and 10 of our GBA students were very lucky to have a chance to visit Mr. Jim Rogers' home in Singapore, as you see in this picture over there, right? We were very excited to meet him, and we had a lot of fun over there, and then getting his signature on the book. He told us a very important lesson in finance. He said the key to succeed in investing are twofold. Okay, twofold. One is buy low and sell high. And 2, don't invest in anything you don't know. Okay, this is the lesson that you should remember throughout your life. I'm going to ask you this question in your final exam. I already told you about your final exam right now. One question for sure will be one of these, right? Buy low and sell high. Number 2, don't invest in anything you don't know. If you don't know anything about certain asset, don't even think about investing it, okay? But let's see. Some of you may say, well, that sounds extremely simple. Buy low and sell high, yeah, of course. And then don't invest in anything that I don't know. Easy, you may say. But really? Is it really easy? How do you know whether the price is low or high? And low or high relative to what? Okay? Relative to what? And what is high? What is low? And then, more important question related to it is that what is the distinction between the market price and the true value of the asset that you talk about? Okay, price versus value. How are they different for the same stock, same asset? And related to economics discipline, what is the concept of market efficiency? Right? Immediately I throw out another important jargon in economics, right? You throw out market efficiency to any of the economics professors, they will say, oh, this guy knows something about it. And then they start to discuss, have some serious discussion with you. So make sure you carry this kind of jargons in your mind. Anyway, now, and this kind of argument, buy low, sell high, and don't invest in anything you don't know, it requires that you have good estimate of true value of the stock, true value of any risky asset. But how can we estimate the true value? Okay, how much do we really know about the company or the asset or the thing that you are interested in investing? Now, price versus true value kind of argument leads us to this kind of formula over here. Okay, but before we move on to the formula, let me ask you this question. Which is observable? Price versus value. Which one is observable? You can see with your eyes, right? Price or value? Which one? I give you 3 seconds. 1, 2, 3. Right. Now, you can observe the price of a stock. Let's say Samsung or Samsung Electronics. Market price of it, you can observe it second by second. Actually, millisecond by millisecond. You can see the price movement because the price is determined in the competitive market and it is just announced to the general public. Okay? US dollar, how is it worth relative to Korean won? The price of US dollar is observable second by second. The price of gold, you can observe it every day. Okay? But the true value of Samsung Electronics, the true value of gold, the true value of US dollar, the true value of Bitcoin, not observable. You cannot see it. Okay? Let me draw a picture for you in this blackboard over there, right? I did not mean to have this blackboard or whiteboard for this lecture purpose, but somehow in the winter break, I bought this whiteboard, a huge one in my home, and my wife almost killed me, but I just have it in my home. Okay, turned out to be useful. So price versus value. Okay, is it the same or not? Will be a question about market efficiency. But the price, you cannot observe it. Okay, the value of this guy, you can all wait. I'm sorry. Did I make a mistake? Right. Just to make sure you are awake, right? Price of any asset, you can observe it, right? This guy, right? The value of the same thing, the true value, you cannot observe this guy, true value. You see that, right? The whole discipline of finance is important because we cannot observe the true value of it. We are just able to estimate it. Estimating, right? Groping in the dark, right? So that's why the finance guys make money, helping other people to estimate the true value, or arguing for true value of a stock, kind of thing, right? The value estimation, well, the formula is at what you see on your slide, okay? That's exactly what you learned in your Finance 101. The value of any project or any company is nothing but a discounted future cash flow, right? Discounted at a relevant cost of capital, right? That's why you see CF sub T and discounted, which means divided by 1 plus R to the power of T, right? That R thing is about your relevant cost of capital. It should reflect the risk of the cash flow, okay? Same thing applied to your company, or same thing applied to any asset, right? That's what we call a DCF valuation, discounted cash flow valuation, right? DCF value. The thing is, this value is just your best guess, your estimate. It's not observable to the public, okay? That's just your argument, okay? So let me move on further. Price is determined in the market. How is it determined? Supply and demand. It goes back to your Microeconomics 101 by Adam Smith, right? Those invisible hand in the market, okay? When each of these individual market participants acts in their own selfish way under some rules, right? The supply and demand, all those invisible hand will, the supply and demand will determine the equilibrium price so that the resources are allocated in the most efficient manner. That's how the invisible hand is working, okay? But whether price is equal to value is another issue called efficient market hypothesis. We're going to spend a whole lot of time about it in the future. And how can you estimate the true value of a company is a serious question. We have that formula above there. Now, my next question related to this is that what are those channels of the value, right? What are those two important factors that make the value, okay? That constitute the value. Finance guys say there are two channels of value. One is discount rate, the other is cash flow. I'm going to get back to this one time and time again throughout the semester. Two important channels of value. One is discount rate, the other is cash flow. The discount rate, okay, should be a function of the risk of this cash flow, okay? And the other is cash flow, of course. And so you need to understand the risk and the expected cash flow of your company or of the asset before investing in any stock or asset. So what is the true value of Samsung Electronics? Well, you'll have to think about their expected future cash flow. That's one channel of value, right? And the cash flow's growth rate in the future, that's G part in this equation. That's still belonging to cash flow channel, right? And you have to discount this cash flow at certain cost of capital or discount rate. But this discount rate has to be reflecting the riskiness of this cash flow. If the cash flow is going to be very risky or fluctuating a lot, if there is a lot of uncertainty related to this cash flow of the company, then naturally you avoid those risks, so much so that the discount rate will be higher, so much so that your valuation number will be smaller. On the other hand, if your cash flow is going to be risk-free or very safe, like 국고채 or treasury stock, treasury bond, treasury bond, surely the government will repay you, okay? So that you don't have to worry about it. Then your discount rate will be very small because the risk factor that you plug it in will be nearly zero anyway, okay? So much so that your true value estimation will be bigger, estimate number will be bigger. Now, those valuation, again, are just our best guess, not an observable, objective number, right? Now, I told you about these two channels of value. One is discount rate, and the other is a cash flow. Now, so those two things, we are going to construct our semester using these two concepts, and then spend our time on each of these two items, right? Now, finance has two subfields, right? In a big picture, one field is called corporate finance. Some of you may wonder, why is this course called intermediate corporate finance, whereas the another course is called intermediate investment, okay? Well, because generally in finance we have corporate finance area. The other is asset pricing area, which is called investment. The corporate finance is about three key decision makings of the CEO. Okay, three key decision makings of the CEO, or equivalently, we would say the CFO's job. Okay, key decision making, financial decision making of this top management. What are those three key decision makings, right? Well, I'm going to bring you back to this board again. Excuse me. And then here, I say balance sheet and income statement going on. Okay. So why do I bring you to here? Well, the first decision making of the CFO is something called capital budgeting, which has to do with your left hand side of your balance sheet. This didn't some of you may say, oh, accounting 101, we learned balance sheet and the left hand side should be asset. Yeah, you're right, assets, and right hand side should be liabilities and equity, shareholders equity, two parts, right? So the first part of your decision making as a CFO is about the asset side. I say capital budgeting, right? Where would you invest your money? Okay, where would you put your money into? Okay, would you, let's say you got $1 billion of excess cash. What will you do with this? Okay, will you put this money into US Treasury or Korean Treasury, a risk-free asset, gold, or would you put your money into Samsung Electronics stock, or would you put this money into a construction project, building some factories in Indonesia? Where will you put your money? Okay, depending on your decision, you're gonna put this money into either fixed asset side or current asset side. You remember that, right? But what was the rule of it in capital budgeting? You remember something called NPV? Okay, NPV, is it familiar to you, right? What was that? Net present value, net present value. What was the rule of this investment? NPV should be what? Compared to 0. Net present value has to be positive or negative or 0? Positive, right? Positive NPV rule. If it is not, then don't invest. Go or no go, look at the NPV, okay? Equivalent rule was IRR. Remember that? If you don't remember these things because you spent so much time in gaming during the winter break, go back to your Finance 101, okay? NPV, IRR. What was IRR? The definition of IRR. The discount rate that makes the NPV equal to 0, right? 0, right? So that's the NPV or IRR rule. Okay, you want IRR to be what? Internal rate of return should be bigger than your WACC, weighted average cost of capital, kind of things. Remember that? Yes. So that's capital budgeting decision. The same thing is called investment decision. Okay, how will you invest your money? Okay, where will you put your money? That's the first decision. The second decision is about capital structure decision. What the heck is that? Well, let's look at the right-hand side of the balance sheet. Okay, liabilities and equity. Okay, or more precisely in finance, we're gonna call this guy, instead of liabilities, I'm gonna call it debt. Okay, interest-bearing debt. Interest-bearing debt. Something you borrowed from the bank, something you borrowed from the creditors, bond investors, kind of guys, right? Some of you, how do you finance your project? The left-hand side was, given that we have money, where shall we put it? The second question is, how will you raise those capital? Okay, how will you raise those capital? Would you go to debt market? Would you ask your bankers and say, please lend me some money, I have some good project over there, right? Would you do that? Or would you ask your equity holders, shareholders, go to the stock market and say, well, here is our great company, please be our shareholders, right? So, and then raise capital in that equity market. Which one would you have to go, okay, to raise capital? That's something called capital structure decision. Capital structure. How will you structure these different sources of fund? Debt versus equity. The structure, you determine it. Okay. These days, this capital structure is getting more sophisticated because financial market is developing in a very sophisticated manner. There are something called mezzanine finance, and then convertible bonds kind of things show up. So a lot of different things are developing over here. So that's the second decision making. Where shall we go to raise our capital? Now, the third decision making has to do with income statement. Income statement. Well, it's your accounting refresher. Okay, accounting refresher. The third decision, okay? First of all, let me ask you, what is the first item in income statement? If you don't remember this, brush up your memories in your accounting 101. Revenues, right? You have to generate sales somehow. And then you subtract out cost of goods sold. There must have been some cost associated with your product, right? And then you have to subtract SG&A, sales, general, and administrative work, the administrative expenses. You have to subtract these expenses, and then you come up to what? Earnings before interest and tax. We're going to frequently come back to this one throughout the semester. EBIT, right? Earnings before interest and tax. Now, somebody call it operating profit. Yes, right? Operating profit. Why is it called operating profit? This is the profit that you can generate purely out of your operation. Then, are there some profits that you can generate without operation? Exactly. That's why we are distinguishing this one as operating profit. There are some non-operating expenses and non-operating income coming in. But the thing is, non-operating side of it, okay, they are usually not important for our day-to-day business. Our day-to-day business is directly related to this operating income. Okay, our major business. Okay, our day-to-day business, operating income. Non-operating income or expenses we are going to largely ignore in this class, right? To simplify our understanding. But interest expense is an exception. Interest expense. This is non-operating. Interest expense is something that you have to pay to the bankers as long as you have debt, right? The bankers don't say, oh, you are having such a hard time of having those epidemic or pandemic of viruses. Oh, poor you don't need to pay your interest this month or this year. They are merciless. Come on, okay? You have to pay interest. Otherwise, if you fail to pay interest expense, you're bankrupt. You will be in trouble. The CEO will get kicked out. Okay? This is non-operational. Okay? It's not a function of your day-to-day business. You have to pay it. Now you subtract this guy out and then largely ignore other non-operating items. And then you get to what? Profit before tax. Okay? PBT. 세전이익, right? In Korean terminology. Fine. Now, there, finally, you have to meet the government, the tax agent, right? You don't want to piss them off because they're the scariest guys. If you piss them, right? You'll be in trouble. So you have to pay tax out of it. Then you'll get to the net income. Finally. Of course, there may be some extraordinary items depending on the fiscal period. But let's ignore that for now. And the net income will be there. So after doing all this business every year, you're going to have net income. Now, what shall we do with this net income? Is an important question. And that is our third questions that the CFO is addressing, called dividend payout, which means out of this net income, some part of it has to be reinvested, and the remaining part should be paid out as dividend in the form of dividend. Okay? Of course, as a shareholder, once you receive a dividend, it's your party time. Yes, you got money out after, all those hard working, right? Party time. But if you spend so much money on this party time, then you will have less of a money to reinvest. So at some part of it should go into the reinvestment. Okay? So what's the proportion that goes into dividend payout versus reinvestment? There's a very, very important question that the CFO has to address. So 3 important questions: capital budgeting, capital structure, and dividend payout. Okay, those things are addressed throughout this semester in this intermediate corporate finance, right? Asset pricing is a study about relation between risk and expected return in any investment. So asset pricing, if you think about the 2 channels of value, what was that? Discount rate and cash flow. Asset pricing is about the discount rate. Okay, how would you incorporate the riskiness of the cash flow in a systematic manner so that you can come up with a good expected return or cost of capital? That's asset pricing. Now, intermediate corporate finance, we will try to cover the major corporate financial issues by going through valuation framework. Okay, why valuation framework? Because that's something comfortable to me. Okay, it's number two, very fun. It's valuation of a certain stock, like any company, Hyundai Motors, or real world companies, CJ, E&M kind of companies, right? Is it correctly priced in the market, or underpriced, or overpriced? Can we determine it somehow? Okay, that's fun because every now and then we see some news coming up, and then we can apply those concepts. And also we can look at it using these three kinds of questions: capital budgeting, capital structure, and dividend payout policies, right? From that kind of perspective, how is this news affecting the price in the market? That kind of things will be awfully fun. Now, the first half of the semester would be about risk and return. It will be about the discount rate channel, okay? And then the second half of the semester would be about estimating the cash flows. How can we get to the best guess of future cash flows? Okay. All in all, these two efforts will be going into estimating true values. Okay. All of these demand a lot of data. Estimating the true, the discount rate. The first part of the semester, right? You need a lot of data. For example, you'll have to run a lot of regressions of obtaining betas, the slope of those things for many, many different years and many, many different companies, right? For second part of the cash flow estimation, you also need a lot of accounting data. For example, if you're trying to analyze Hyundai Motors cash flow, and then you try to come up with best guess of future cash flow of Hyundai Motors, guess what? You need to understand the whole industry of automobile, right? So that you need some historical accounting data of tens of hundreds of automakers, Tesla and GM and then Ford, all these kind of Toyota kind of guys, to compare with the Hyundai Motors. Only by then you can see, where the Hyundai Motors sits relative to their competitors over 20 years history. By understanding their history, you can have some good guess about where they will go into the future. The chances are, if they have been doing smart decisions over the past history, then as long as the CEO is over there, he will be keep on doing, or she will be keep on doing smart things. Okay? Vice versa. On the other hand, if the CEO was doing stupid things, and then the CEO still sits in there, stick his butt in that position, and then do nothing, keep on doing nothing, keep on doing stupid things, then guess what? The company will have no cash flow in the future. Okay? So for that part, you need to understand what happened in the past, right? You need to work with a lot of data. Okay? In fact, finance has been using big data. Okay? These days, so many people say something big data. Oh, that sounds sexy. And then big data is something whole new things driving us to a new place. But for finance guys like me, right, or us, right? What's a surprise? We don't, we've been playing with big data. We have been working with this big data for over many years anyway. Just the machine learning technique may be something new, but I'm not going to touch on this machine learning technique in this class, don't worry. But the big data part will be here for you. I'm going to ask you to download a lot of data from valuable sources So get ready for that and then play with that. Now, having told you about this cash flow channel and discount rate channel of CFO's decision, here is our very tentative class schedule over this semester. Notice that we have 15 weeks this time, and first half of the semester will be about discount rate, I told you before. That's going to be until week 6, okay? Afterwards, it's going to be about cash flow. The structure of our class is such that our midterm exam will be in the week 8. So get ready for this, right? Now, first class will be about introduction and valuation basics. And second week, it will be about corporate governance a little bit, and then there will be some refresher about discount rate. What is the discount rate framework that you learned before in Finance 101? Do you remember CAPM? Do you know CAPM, right? CAPM, Capital Asset Pricing Model. Remember, asset pricing is one discipline, or the other half of finance discipline, asset pricing. Decipher this word, capital asset pricing model. You have asset pricing in the middle, right? Right. So CAPM model will be studied again. Okay. I don't know how you learned about CAPM. Some part of finance education, they force you to memorize some formulas blindly instead of telling you about what's going on behind this formula. But I'm going to take you to the theory behind it and then tell you the story related to this capital asset pricing model in more detail. So each and every component of it will be studied. What was that? Capital asset pricing model. It was about, please bear with me. Capital asset pricing model. Our grandpa model of risk and return framework, right? Expected return of your stock will be nothing but risk-free rate plus some risk premium. As long as I take some risk, I want some more compensation for my risky investment. That's called the risk premium. That's RP, I would say. But this risk premium, how did you structure it? We call it beta I RM minus RF. Remember this, right? If you forgot this, go ahead and brush up your memory, okay? You just have to see my lecture notes. Now, so each and every component of it, we're going to study risk-free rate, and then market risk premium, and beta, right? Then we will reach week number 4. And then week 5, we're going to study in more detail about this beta and bring in the concept called the bottom-up beta, bottom-up approach, as opposed to regression approach that you learned in financial management, okay? And that there will be some single division versus multi-division company cases so that the bottom-up beta can be more complicated, okay? Why do we learn this thing? You're going to see that this beta is directly related to your capital structure. One of the important decision making for the CFOs, right? So beta, for this part, we're going to learn about capital structure decision. Then we're going to cover cost of debt and weighted average cost of capital, reflecting the required return for these debt holders and equity holders, right? And afterwards, we're going to learn about the cash flow side of the companies or the assets, right? The first approach of estimating cash flows is using the firm valuation method, okay? The second week, we're going to learn about cash flow estimation using equity valuation approach. So these two will be like whether you want to take the perspective of the debt holders and equity holders, or take the perspective of only the equity holders. Okay, it's your choice. Okay, but we're going to learn both. And before we go to this equity valuation, we're going to take midterm exam. Notice there is a 석가탄신일, or Buddha's birthday, right? Buddhist holiday on April 30th, right? That's your holiday, no class, but that week we're going to have midterm exam. The week after, you have 어린이날, which is like a day for the children. That's not for you, but you still take rest at home, enjoy together. It's a national holiday, so don't come, right? But that's the week of learning about equity valuation. The next week we're going to learn about more detail about the discounted cash flow valuation, DCF method, to come up with a more precise estimate of cash flows. And then the remaining 2 weeks, we're going to spend some time learning about capital structure theories in much more detail, right? And final exam, okay? If time permits, we're going to go through dividend payout policies. But the free cash flow estimation part and the DCF part, we're going to talk enough about how to estimate dividend, how the dividends are determined, by the way, right? And then final exam will be in the week of June 2nd, so get ready for that. Now, the interesting part of this I-Core related classes, including intermediate corporate finance, is that we have I-Core project over the final 2 weeks of our semester, which is from June 5th all the way down to June 19th, right? 2 weeks time you have it, right? What do we do? Well, as you may have heard of it, right? As you may have heard of it, right after final exam, you're going to get to our international hall and then get the assignment, right? A mysterious company that we don't know, but until then, right, will be assigned. Me and our I-Core professors will determine what company will be analyzed this time. Last year it was about LG Chemical, right? This year, what company would it be? We don't know, okay? But it's gonna be a fun project. So that you analyze those companies and we throw you some questions so that you can address it from the perspective of 4 different disciplines, right? Finance, marketing, strategy, and operations, right? So the questions will be more integrative so that if you miss any of these part of your I-Core classes, you will be in trouble, okay? It demands you to study hard in every aspect, okay? But hopefully you will specialize in one part of it, but you will have to be an all-rounded, well-rounded player, okay? The team assignment for this I-Core will be random. So you never know who you're gonna get to the partner with, okay? But this is the flagship program of Global Business Administration. We are very proud of it. Has been there for a long time, okay? Analyzing real world companies, and so it's gonna be fun. Let's see. Now, class hours and classrooms, of course, you know this, Tuesday and Thursday. Section 1 and 2, depending on where you are, 12 p.m. to about 2:45 p.m. It goes there, right? International Hall, 90110. Okay. Chances are we're going to have a lot of video classes. So get ready for that. Video classes instead of getting into one small classroom, right? Because of the virus situation. I hope that this situation will be resolved somehow so that we can meet face to face, right? But let's hope for the best. Now, attendance and participation, right, will be about 15% of your grade. Okay, some of you may wonder, attendance, what do you mean? Well, we're going to check it through your internet system, right? The iCampus system watches you, whether you are really taking this course or not. I cannot, the trouble is, I cannot gauge how much attention you are paying to my lecture videos. Okay? But what can I say? We're trying, okay? So, of course, you have to attend this class, and sometimes I will check it. If it is offline class, it is usually awfully fun class. So if you don't come, you will miss the fun part. The loss is yours. But coming in will be, advantages for you, of course. Due to the circumstantial limitation of virus, I will try Google Forms. What? Google Forms? What are you talking about? Well, this is a Google document kind of things so that you can access it from your side of your computer. It's kind of a Google survey kind of things. Once I set up some Google survey, I will throw it into your email address so that you can click it and come into that Google survey and then fill in to my question, okay? The first Google survey will be just about ice-breaking kind of questions. What kind of fun did you have over the week, over the winter break kind of questions will be there for you. What's your career aspiration kind of things. But make sure, okay? Make sure you check your email frequently. The email address that you provided when you registered for this class, okay? School email address or something that you provided to the system. Many students jump around different email system. Sometimes use Gmail, sometimes use Naver, blah, blah, blah. But remember, this school has only one email address of you. I want you to get back to that email, okay? So check it. And then the ones that respond will get some credit. I may ask some numerical questions or conceptual questions related to the class as we move down the road, okay? You must type in your student ID correctly in that survey. I have that question section over there for you, okay? And I will count only your final submission of this survey for each time, okay? The thing I found is that you can access this survey many times until I say this is a deadline. Boom, close, right? So if you just submit it once, you're fine. But if you happen to submit more than once, right, I will only take your last submission. And then valuable comments or suggestions via email will also get some credit. So I encourage you to say something over there, right? Thank you, right? And the course grades, right? The whole course grade structure looks like this. Midterm exam, 20%. Final exam, 35%. And term project, that is I-Core, 20%. And there will be mock trading, 10%. And attendance and participation, 15%. I told you about this one. Now, so does it add up to 100? You should check it, right? Seems like. A or better would be 50% by our regulation, and C or worse will be about 10%, okay? Relative performance evaluation is going on, just is enforced by the law. I cannot do anything about it. Grading, never ask for higher grade, okay? Such solicitation may result in punishment or lower grade, Okay, because the person is asking for favoritism, sacrificing his or her friends and neighbors. Besides, the 김영란법, right? 김영란 law. By the way, she is not my sister, even though I am 김영한 and 김영란. Only one character difference, right? I don't know her. She doesn't know me. Who are you, right? And 2016, right? That law forbids such solicitation. So don't ask me. 뿔 달아주세요. No way. Okay. So be careful. Midterm and final exams, right? 20% and 35% each, right? It's gonna be restricted open book exams. What do you mean, restricted open book? Well, bring in your cheat sheet. No textbook, no book, no lecture note, right? But one piece of paper, A4 sized, back and forth, okay? You write down the formulas that you want, right? You are not sure that you remember those formulas. Oh, Jesus Christ, that's so complicated. So let's write down. Oh, fine. You don't remember diagrams or wordings. Fine, just have it on your cheat sheet. Okay, that's the policy. It's gonna be a Singaporean style exam. What do you mean Singaporean style exam? Well, you will only have pen, eraser, or pencil and eraser, right? Calculator, and the cheat sheet that you brought. Okay, nothing else should be on your desk, right? Especially no networking device, which means your cell phone, smartphone, computer, laptops, or whatever, gaming machine, pack it into the bag and then put it into the podium, okay? Not on your desk. I don't want you to be like, katok, what's the message or what's the answer for this question number 5? Katok, kind of things. No, okay? If you miss the midterm, you will get 0 point, 0 mark, okay? Unless it is an absolutely urgent family problem or your health problem, you should show up and take it. In case of family emergency or health issues, please provide any written evidence until the following class, following week, okay? In case of health issues, get a medical certificate and show me the evidence, okay? Only then I can let you load onto the final exam, which will be 55% of your grade. You don't want to, load onto that, right? So no makeup quiz for anybody, okay? So keep that in mind. Now, textbook. No textbook. Yay! Just follow your class note, right? So that's good. But we have reference books. One is Equity Asset Valuation by CFA Institute, and the other is Investment Valuation by Aswath Damodaran, right? Let me explain a little bit about these two books. Why CFA? CFA book, right? It is called Chartered Financial Analyst, right? This is a charter designated to a person that passes certain tests and has some work experience in finance field for 4 years or something. This is a charter, but it is different from a license called a CPA. Okay, they are very different. Now, for CPA, it is an official license. There are some jobs that only CPAs are allowed to do it. Okay, like certifying your 10Ks or accounting reports of any companies. You have to have the CPA license. But CFA is just a recognition that you have some finance expertise. Okay, it's no guarantee for getting jobs at your stage at all. Okay, so don't get confused. CFA, but it tells two things, right? You can explain and analyze finance. Okay, you're an expert in finance. Number two, and that in English, right? You can say it and write it in English. So that's why I encourage you guys to pay attention to this or take some exams in CFA in the future. Right? It is suitable for jobs with high expertise in finance as stock analysts, fund managers, investment bankers, and etc. etc. In the world outside Korea, okay, inside Korea they don't care. Honestly speaking, they don't care. Okay, so for your perspective, as long as you want to get in, build up some global career in finance industries, this will help you in the future. So keep it in mind. So that's part of the reason why I say this book is your reference book. To say a little bit more about the CFA exam, there are level 1, 2, 3 exams, right? Every year, and then you need work experience. If you don't have work experience, you don't get CFA charter at all. Okay. The idea is that not only academic knowledge, but also real-world practical knowledge should be there to have a CFA designation. Okay. So you have to be prepared in both ways, and then you may ask this kind of questions. Oh, right now that getting jobs is terribly difficult. Do I need to pass, okay, all these 3 levels of CFA exams to get a finance jobs? No. First of all, in Korean market, they don't care about it. I told you before that only global banking industry cares about it later on in your career. Not right now, but it will help you, okay, as you move down the road, okay, one by one, step by step, level by level. Now, experience the world of finance first, like get some internships and work over there, right? Somehow. Have you sent your resume to any the banks this semester, this time, right, until now? Okay, have you sent your resume? Make sure you do it, okay? Because the summer break, or you have to prepare for that kind of internships, right? Oh, I'm just a 3rd grader, or not a graduation year. No way, right? People are doing internships in their 1st year, okay? Especially in Hong Kong and Singapore and the US. And the Korea the situation is getting the same, similar. So why don't you send out your resume right now, okay, right now. And then if you send it right now, then you'll get some response in 2 months or 3 months from now. Okay, by the end of the semester, you may have some interviews. If you try to prepare after the midterm exam, you may be late. So that's why I tell you right now. By the way, so experience the real world of finance first, get some taste of it, and try to pass some exams, right? Level 1 maybe. Okay, level 1 especially will be doable for you guys anyway. Very easy. Okay, basic finance and statistics. If you don't take it right now, you will feel sad about it later on. Okay, so that's why I'm telling you. Why this book? This is official guidebook for CFA exam. Because of the rising popularity, and it is succinctly describing all those concepts. And then book chapter problems and cases are good for your self-study. So that's why I encourage you. But this is not official textbook. The second book, Investment Valuation by Aswath Damodaran. Why this book? Well, simply this is a Bible. I should have said a Bible over there, right? I'm Korean. That's why I miss always the and a, okay? This is a Bible of the industry, okay? Like a cookbook, right? So many things are covered in detail, and Damodaran is a great instructor, both verbally and in written language, right? So it's fantastic book. I strongly encourage you to have it in your shelf, right? Calculator policy, right? Use financial calculators such as Texas Instruments BA2+. I have personally no incentive or any relation with this Texas Instrument or anything. I'm not a salesperson, no, okay? But why do I say this? because this is an officially designated calculator by CFA organization, CFA Institute. In the CFA test, you will need this calculator anyway. So why don't you familiarize yourself right now? Okay, that's the idea. If you use this calculator, I can give you some directions about it in the exam setting as well. In that difficult time, right? Everybody's in a hurry, and I can give you some answers to your questions, quick questions. Right. And then if you, on the other hand, if you choose to go for engineering calculators, it's up to you. Good luck with that. The trouble with that is that I cannot help you, right? If you are screwed doing cash flow calculations or getting present value and then the formula screwed up, I cannot, I will not give you instruction about it if you're using engineering calculator. Okay? At your own risk, you can do it. Term project, I-Core, takes up 20% of your grade. This is common across our 4 I-Core courses, right? 20% in common, right? You will be randomly assigned to a team for this project. It will be mixed across 2 sections. We have 2 sections in this class, 2개 분반, right? Grading, by the way, A, B, C, D, will be given across these 2 sections, right? I'm not grading one section separately and the other section separately. All of you, 120 of you guys, are in one basket so that we are comparing, okay? And during the final 2 weeks of the semester, you will value a mystery company using the techniques that we learn in class. Then you should do a 10-minute English presentation. And a real-world stock analyst or company manager may come to you and do some Q&As with you. Try some interactions with you. Okay? What do I have to submit for this I-Core, 20% of the grade? You want to submit your PowerPoint file, okay, the slides, and report, of course, MS Word, and then you have to submit the YouTube link to your presentation video, 10 minutes, right, 10 minutes, and peer evaluation, right? The last page of this syllabus, the syllabus will have that peer evaluation. That is your time to revenge against those who free rode throughout the team project period, okay? So make sure that you dedicate yourself enough for this team project, okay, so that you will not be free riders, right? And mock trading, okay, will be there for you. 모의 투자, mock trading sounds similar, right? 10% of your grade, and here's the reason why I imposed this one. The best way to learn about finance and economics is to do stock investments yourself, but not with borrowed money, okay? Be careful. That will be the best way to, or the most effective way to screw up your life, okay? The scariest way is investing in stocks with borrowed money. No way. Only with your excess cash you can invest it. Now, given that you are a student situation right now, we don't have money, right? You're all poor. But is there any way to get over this situation? The 미래에셋 대우 came up with this idea. Okay, no money needed, okay? We're going to provide you some platform so that you log on to 미래에셋 대우's system, then you can do some virtual trading or mock trading with some virtual money, not a real money, okay? So over a semester, you can test it, okay, and see how your students do, right? In real world investment. So I said, That's a fantastic idea. Let's do it. And stock investment competition among students using virtual money is this one. Now, this is going to be an individual competition, not a group level competition. Why not group level competition? Well, it turned out to be very boring, right? Group level, they will try to form some portfolios, so much so that there will be no extreme positive or extreme negative returns, but everybody will be performing like the average, right? So no fun. But individual competition is much more fun. There will be some crazy guys doing some crazy investment with this virtual money. So I'm letting you go your way, okay? And let's see how you do it, okay? Each person will be assigned 100 million Korean won of virtual money in your virtual account at Miraeasset Daewoo Securities. Invest your virtual money in the stocks in KOSPI or KOSDAQ, right? There may be some strange new instrument or strange new financial product like ETF or leverage ETF. Some of you may say, what the heck is that? Well, that's a great opportunity for you to learn about these new jargons and new concepts that is not necessarily told in my class, right? Explore your way out. Some of you may say, I am newbies to finance. I'm not interested in finance. But you have to. Okay, everybody is in the same situation. Somebody doesn't like marketing, but they are still in the marketing. It's the same thing. Anyway, now the period for this mock trading will be from March 23rd to May 23rd. I give you enough time to register yourself in that Miraeasset trading platform. 2 months trading period. Okay. Notice that this is not a long-term investment. Okay. Some of you may wonder, some of the students may complain, my true ability of analyzing companies focused on long-term valuation, but why short-term valuation? Good point. I encourage that kind of problems in your mind. Okay, write down those things, and then keep as memorandum. Okay, and then submit it to me later on. Each individual should register for Miraeasset account following the direction provided in iCampus. The best performing person will be awarded as much as 500,000 Korean won by Miraeasset. It may be smaller, but maximum 500,000. Okay, so that's that. And another thing that I have to add over here is that after this mock trading, write down what you learned. Okay, so much so that let me see what you learned over there. Okay, how can you apply those concepts that you learned throughout the semester into this stock trading? Okay, convince me, right? That whether you learned something or not, and then whether you picked up something new concept through this mock trading platform, go ahead and then incorporate it into your reports. I'm going to tell you more about this report as we go down the road in the semester, so that not only the best performers in the stock trading gets highest mark, but also you will get compensated for your reports, okay, for this mock trading report, okay, so that you will not feel alienated. I'm not good at trading at all. I got 0 point. No. Let me see how much you learned through this, okay? What you felt, okay? What you feel about this trading tradings and the market itself. Now, the databases. I told you before that finance has been using big data, and I will force you to download and play with megabytes and megabytes of data. Of course, it's not gigabytes because you guys are in the undergraduate level, right? But megabytes of data will be big enough to scare you, right? Two databases I encourage you. The first is WORDS, WRDS, Wharton Research Data Service. This is by far the best data source in global business research. You will learn about how to access the data and download some of it like CRISP and the CompuStat. You need to request a student account through SKKU's library system. All right, so I'm going to give you the link in the syllabus document, Word document. It will have you have that URL that you can access. Now, the second one is about Data Guide, Data Guide Pro. That Word is about US and international data. Data Guide is about Korean data. Okay, Korean companies' detailed data. This is the best data source for Korean business research. I will let you know how to access it through Excel and add-in function. All right. Of course, this will be the URL about this will be also in the Word document syllabus so that you can download and install in your computer system yourself. Now, so that's basically it, and it seems like this is the end of the first lecture note. Yes, all I can see is a black screen right now. Where are you? Hello. And then so let me finish at this point, and thank you.